All right, what's up, YouTube? So take a look at oil prices here. I know you see, I have it highlighted every single dip that this thing has taken, but as you check it with the RSI is showing us when is the perfect time to buy, and every single time you see the RSI holds us true. And right now the RSI is showing us another bullish signal due to a lot of oil selling in that sector. So it might be time to look at leverage oil plays. It might be time to look at oil companies that are getting real, beaten up so far. So oil might be going to $60. That might be the next step. So as we look at Elf Beauty, we see that it IPO'd. After it IPO'd, it kind of sideways traded. Not a lot of price action, going on with that stock. I would say after a good earnings call on the stock did go past $32. It hit an all-time high. Those prices were supported due to the earnings call. That's what we want to see when we're looking at Snapchat. We want to make sure that a lot of these prices are supported with the earnings call. So, you see this $29.44 level, and you see this $20.64 level. The company really has nothing to base its prices on, because there's nothing really good happening to the stock other than, it's a small float. There's a lot of traders coming in and trading this thing. But as you see here, from $29 to $20, it's going to keep trading into this range until we can actually get a really good earnings call, or we can see some kind of profitable way this company will make a turnaround, because there's a lot of negative to the stock. I would say this is definitely something to watch. I wouldn't buy just yet. We want to make sure that the company is actually producing some good quarters ahead of us. We want to make sure that the company is actually producing actual good quarter beats, and we want to make sure that the company is having positive guidance for the year. If Snapchat can produce good earnings and have a negative outlook for the year, we might see this company go below $20. But if they do, I would say produce a downward a missed estimates and produce some good outlook for the year, we might see this thing go up. So there's a lot of things to play into factor here when we want to talk about which way this company stock goes. But right now it's going to keep trading in a sideways trading range until we can actually sustain some prices and support some prices with earnings results. So that's what you're really going to see here. We can go back to previous IPOs and look at previous IPOs. Of course, they spiked. Some IPOs even ran up over 100%. But as you see, the company's prices come right back down because these movements are not supported, because the earnings do not show that this company price to be supported at this stock level. So that's what we want to pay attention to. So take care, guys.